Porinju Veliyath, founder and CEO of Equity Intelligence, joining in. Porinju, always a pleasure to have you on. Thank you so much for your time to us here at NDTV Profit and on India Market Open. All things considered, would you say 2025 in that sense for Indian markets has been a year of survival? Everything that is possibly going to be disrupting the market seems to have happened, right from the tariffs and all of those fears at the start. We're ending the year also without any resolution in sight, maybe.
Hi, thank you, and good morning, all. See, I think the last 1 year, maybe a little more than that, I think India, the broader market, has been in a bear market, I would say, which is very important. And we are seeing almost all-time high in the NIFTY. Perhaps this is the most hated all-time high of NIFTY in the history of Indian markets. You know, the way the broader market underperformed consistently, and maybe it's almost 5-6 quarters it has been happening. So it was a bad year for the broader market, and most of the investors, despite the NIFTY staying strong because of the domestic liquidity, mutual funds and the large funds are buying into the same large cap companies. So nothing wrong in that. But I think there was very significant correction happened. I don't know how long it will go further. Maybe it's already over or it's near to the bottom. So that way, I think there is hope for the 2026 in the coming year. We are going to see a lot of values emerging in many pockets. Already there are values, though it is ignored by the market. So 2025 was, I would say, for me, it was bad. Even my fund has underperformed significantly, to be frank. But we are very hopeful. The value investing has the big relevance. That we have to stick to the long-term India optimism. So that is all I can say when we talk about the next year or the years coming up. So there is scope. There is so that's what the investors in equity can do, and that is very relevant. That that long-term India optimism is very rational.
Right.
So stick to that.
Stick to that. Good advice, Porinju. But on your portfolio level, where are you going out and doubling down? And thanks for your candor, and it's not just you. I think a lot of fund managers have faced that pressure because of the broader markets and the way they've done. You can have stock-specific selections that have gone wrong. So where are you doubling down in anticipation of a bounce back in 2026?
We will continue to be in the large small caps and mid cap segment in general, but note that we are against any large cap companies. But there are 23 years of history. Equity Intelligence has been mostly into the quality mid cap stocks or some of the small caps, and many of them have gone 20, 30, 40 times, and some of them have become large caps. So that's where you make a lot of money. But this kind of what you call that cyclicality, every strategy don't work all the time. So our strategy has been consistent, and we will continue with that. There is enough potential to create alpha, especially from here next 1 year, 2 years, or 3 years, by sticking to our core philosophy and strategy.
Porinju, how do you see the whole pace of IPOs, which have continued, and we're set for a record number in the month of December as well? Do you see the primary market dominating the mind space, especially of retail investors, all through 2026?
I think it will continue. We will see new supplies, new segments, which is not existing in the already listed space. New innovative companies, ideas, business models are going to come. So that's driving Indian economy itself. And from the policymakers' side, they are doing a wonderful job in this regard. The kind of labor reforms what we recently it has come up, and those things are very, very important. Now it's a win-win for everybody. Even the laborers are going to benefit. It's going to be good for the business, the entrepreneurs, And a lot of small, medium SME companies have been suffering with these labor issues. There was a tendency in many states, being harassed by the labor authorities. So I think this very comprehensive labor law, which was very important, and many things happening now, like the GST rationalization, or private sector allowed for the nuclear business, which is very important. So these things are going to drive new verticals, new opportunities. Some of the existing companies, listed companies, are going to do well. I don't want to tell any name, but there is not much clarity. Some of them could be in the infancy in developing the new models and adapting to the new policies. So opportunities are there enough. There are many pockets. So investors should be smart enough to move with the that kind of an ecosystem where the opportunities are popping up.
Porinju, just trying to get, and I understand that you will have a bottom-up approach to picking the stocks that you have, but there must be some indications based on the sectoral bent that you might have, right? So you might prefer one or the other. Give us a sense of what your thinking is at this moment.
We all know, everybody knows that there is issue of very richly valued markets in general in India. We all talk about the long-term India optimism, but market sometimes it discounts in much advance, and some stocks, some managed stocks, some operator-driven stocks, they take advantage of that. So we will be always surprised how this stock can quote at 20 times sales and 300, 400 PE. So it's basically they are betting on the future optimism, the investors. But whatever said and done, a lot of things happening in the market. In the IPO, I was talking about the IPO itself. So the domestic liquidity, that is like never before. I don't know, Neeraj may be remembering, I have been talking about this power of domestic fund flow, the potential of fund flow into the equities. So that has been happening now, and this will continue. Many more households, the middle income households, they want to get a pie of that growth of Indian economy, and they are investing in equities. The SIP was a wonderful model, with the financial inclusiveness. So I think India is firing on all, with regard to the investing in equities.
I'm going to have to ask you to stay on because we need to address the rupee right now. And, I'm going to come back and actually get your view on this as well. Rupee is approaching an all-time low, 89.76 right now. And we're going to get a quick view from Abhishek Goenka, India Forex and Asset Management. Abhishek, very good morning to you. This is a downward trend which is continuing. How far or how low do you think it goes? When do we reach 90? Is it going to be sooner than anticipated?
Well, it's just close to 90. It's anybody's guess. But, what we are understanding that 89.80 is what RBI is protecting right now. The move has happened too fast. And Indian fundamentals are not so bad that rupee is weakening so much. So I personally feel at the current levels, we are at least 2 to 3% undervalued. So, and obviously the main reason is the increasing deficit because of gold imports, lower interest rates, and also no clarity on the trade deal. So, if there is any clarity on that side, couple of percentage point appreciation in the rupee will be anybody's guess. It can happen anytime. So, I would personally feel that we should not get very pessimistic right now on the rupee movement. 90 is just a psychological number, which RBI might protect for some time. But by no means 90 is a fair value of rupee.
Okay, Abhishek, hi, Alex. I'm just wondering though, what are the triggers in the near term, in the recent past? Because we've seen a pretty sharp slide over the course of yesterday and today. Yesterday, I'm guessing that there would have been intervention that pulled the rupee up in the second half, right, or towards the end of the session. What is happening right now that is taking us lower? Especially because the dollar is not showing any incredible signs of strength.
I think it's clearly that we have spent $75 billion in terms of, dollar short positions. And, that is where RBI does not want to spend more reserves in protecting the rupee. That's one sign that we are getting in. They want to use it judiciously now. Second is, of course, our interest rates with regard to U.S. interest rates are not as high. A lot of debt market money is still going to America, and it's not coming to India. Even the NRI flows have come down on that front. As you say, we've seen the current account deficit numbers slightly deteriorating because of gold imports last couple of months. And continuous outflow from the FII is also not abating. In fact, I'm very surprised that we are selling in the market, taking out money, and the rupee has also depreciated so much. Then you're getting a double whammy. The markets are up, plus the rupee is also weak. So those are the cumulative factors. And one very important factor is that exporters, which was continuously selling in the market, are kind of absent right now. Importers are still getting active because of continuous depreciation. So exporters are taking a backseat.
Yeah.
So when it's about demand and supply,
so then, Abhishek,
the interbank side,
that's an important point. So therefore, would it be fair to say that in the near term, and I'm talking about a couple of months, the next trigger that could pull the rupee back up to more saner levels, and you've talked about the fact that it's undervalued at this point, is that trade deal?
100%. That is something everybody is waiting for. Once that comes in, a couple of percentage point can happen in 2 days' time. I mean, in terms of appreciation. So just a matter of time. And I think everybody is waiting for that.
Thank you so much.
But having said that, smart exporters are still selling in the market.
Smart exporters are still selling in the market. Why do you think so?
Because they're understanding that these levels are not realistic. And they have to protect the business.
Yeah.
And the business is not so bad for most of them.
Okay.
Business is still picking up. Margins are getting shrunk. So they want to protect the rupee at these levels.
Okay. So intervention could come in. Thank you so much, Abhishek Goenka there. Just a quick word from you, Porinju, and since we have you while we're talking about the context of the rupee, are factors like this a dampener for equity investors?
You are talking. I did not hear the interview. It's about rupee.
Yes, rupee at new record low of 89.85 against the USD.
I don't think it will be a big,
It's not a negative. It's not a negative for.
I don't think this has been happening all the last many decades.
Yeah, but 90. We're at 90 now, Porinju.
Yeah, I remember when it was 4 rupees. So that so it has been moving all the way up. So I'm not an expert, to be frank, about the forex or how the
no, but you think for equity markets it doesn't make a difference?
I don't think. Now our challenges or the good positives are much bigger and very different. All of us know that relative valuation of India today is high, but because of the correction of the last 1 year or more of the broader market, so it has become reasonable today, mostly. So a lot of stocks, many of them, hundreds of stocks are at 30, 40, some of them 50% below their 1 year high, the earlier high. So this gives an opportunity for, very selective stock picking. It's again, I am telling, this is, India is again a heaven for the, the cherry picking style. So there is no doubt that stock picking is going to do very well in 2026. It will be bouncing back.
Got it.
A lot of worthy stocks are going to bounce back. Some of them may go 50% higher, or some of them may double in the next 1 year. But I don't think index NIFTY can go more than 5-10% in 2026.
So Porinju, I've just walked in and I just want to know, because the peg of our next piece is that as to how's the Josh. I'm presuming from your answer that the Josh is very high in you right now for Indian markets.
Yes, Neeraj. It has been reducing because of the valuation. We have to all agree with that. So a lot of people have started investing abroad now in the global companies, thanks to Gift City and that ecosystem, allowing even small investors who want to take an exposure. If you feel the valuation in India is very high, or unsustainable. There is an option today for the Indian investors. But I feel the Indian stocks are still very hot, and it will continue to be. At the same time, people who do momentum trading and, new investors should be worried about the 50, 60, 100, 200 PE stocks. Only 10% of them will deliver going forward. The remaining 90% may have severe correction, or there can be long-term time-wise correction, time correction. So people should not just take. I was just listening to our Rajiv Thakkar, PPFIs, was talking about, the boiling frog syndrome. Something trading at 25, 30, and they go on being comfortable, go to 30, 40, and 50, 60 Ps. People don't, realize what is it.
That's true.
So investors should be cautious and conservative, even after this last 1 year correction in the broader market.
Makes sense. Okay, well, that's a constructive Porinju Veliyath, but cautioning at the right notes as well. And Porinju, thank you so much for taking the time out and being with us today. On that note, really appreciate your time.
Yeah, thank you, Neeraj and Alex, the team. Wonderful talking to you guys.
As always, Porinju.